Question number 2, Tim Macindoe.
Thank you, Mr. Speaker. My question is to the Minister of Finance. What reports has he received on the outlook for the New Zealand economy?
Mr. Speaker.
Honourable Bill English.
Well, a rather more thorough report than that. Mr. Speaker, I have received a report. I've seen reports where Fonterra have revised down their forecast payout from $5.25 to $3.85 per kilo of milk solids. Now, this reduction will clearly have a significant impact on the dairy industry and dairy-intensive parts of the economy. But it isn't a particularly surprising downgrade, as it reflects the ongoing reduction in the international dairy price. Fonterra has at the same time announced a higher earnings per share of 40 to 50 cents and an optional interest-free support payment of 50 cents per kilo of milk solids. It's clear that for dairy farmers, times are turning out tougher for longer than forecasters previously expected, but the additional measures announced by Fonterra on Friday will offset that to a certain extent.
Supplementary question.
Supplementary question, Tim Macindoe.
Thank you, sir. To the Minister, what effect will the fall in milk prices have on the wider economy?
The Honourable
Speaker,
Bill English.
Well, it will certainly have a big effect on the dairy-intensive parts of the economy. A drop in revenue of this magnitude in the dairy sector will have flow-on effects to the wider economy, because the dairy sector makes up about 20% of New Zealand's exports and around 5 to 6% of the total economy. The automatic stabilisers, though, are providing support to the dairy industry and to the benefit of other industries. For instance, the New Zealand dollar is down 25 cents against the US dollar in the last 12 months, and this underpins the returns of all exporters, not just those with dealing with low prices. And the Reserve Bank has cut interest rates, the overnight cash rate, to 3% and indicated this may fall further. The Reserve Bank's most recent forecasts of the economy show that the economy is growing around 2.5% a year, which is solid, sustainable growth.
Further supplementary.
Supplementary question, Tim Macindoe.
Thank you, sir. What other reports has the Minister seen on the economy?
The Honourable Bill English.
Mr. Speaker, in its monthly economic indicators released last week, Treasury said that most indicators remain around their long-run averages, with the exception of dairy prices, and are consistent with an economy growing around its trend rate of 2 to 2.5%. Statistics also released the latest employment figures last week, where unemployment increased from 5.8 to 5.9%. At the same time, the average wage increased 3.2% in the last year to over $57,000, considerably faster than inflation of 0.3%. Of course, there are a number of risks to the economy, well-known risks such as the uncertainty around Greece, some uncertainty about China's growth prospects. So there is some chance that we could move away slightly from the 2 to 2.5% growth rate that we are seeing now.
A supplementary question, James Shaw.
Thank you, Mr. Speaker. Has the Minister of Finance received any reports that show that the New Zealand economy will face a $7 billion hole as a result of low dairy prices? And what specific measures is he putting in place to ensure that distressed dairy farmers are supported through this commodity price crash?
The Honourable Bill English.
Mr. Speaker, yes, I have seen those reports, and I'm pleased the member asked about it, because in order to understand the context for this, that $7 billion reduction is a reduction on nominal GDP of over $220 billion. And so when you look at it that way, you can see that it's going to have a negative effect on the economy, but a containable effect, and we can continue to grow at moderate rates. With respect to dairy farmers in distress, the governments have had in place for some time measures for those families who are in severe financial distress, but generally the government would not be looking to financially support dairy farmers because of low prices.
Supplementary question, James Shaw.
Does he regret telling Radio New Zealand in March that the concentration of capital in dairying was, quote, not a bad thing, end quote? And how will he now ensure that this over-allocation of resources into one sector doesn't now put out of work thousands of farm labourers, retailers, contractors and suppliers who all rely on dairy farms?
The Honourable Bill English.
Well, Mr Speaker, the flow of capital into the dairy industry has been based on a longer-term confidence that across the Asia-Pacific, fast-growing class of middle-income consumers will show more demand for dairy and other protein products. And that is a view of the world that's not really disputed by anyone in particular. In the short term, however, the reduction in income will, of course, have an impact on employment directly on dairy farms, but in the supporting towns and services. The measures announced by Fonterra last week and the positive indications from the banks that they will finance cash flow for dairy farmers over the next 12 months means that it won't be as bad as the straight drop in income indicates, because dairy farmers have to spend $4.50 a kilo just to get the milk on the truck.
Supplementary question, Tim Macindoe.
Thank you, sir. What implications do recent developments in the international economy have for New Zealand's economy?
The Honourable Bill English.
Well, Mr Speaker, while there are risks in the global economy, it's evident that growth in our trading partners is holding up reasonably well in the range of 3 to 4%. And when we look back through the history of New Zealand's growth patterns, it's reasonably clear that when our trading partners are growing at that kind of rate, 3 to 4%, that's a positive indicator for sustainable, moderate growth in New Zealand, around 2 to 2.5%, which is our long-term trend growth rate.
Supplementary question, James Shaw.
Thank you, Mr Speaker. So given his previous answer that investment in dairying was based on a long-range view of the sector, what work has he done to understand if the dairy price collapse is actually a structural long-term change in the market rather than a cyclical short-term change?
The Honourable Bill English.
Well, Mr Speaker, we try and make an assessment about that the same as everyone else. It's pretty evident, though, that no one's quite sure. It's likely dairy prices won't go back to $8 a kilo. In fact, it may well be a bad thing, because what's evident is that the price going that high has stimulated not just positive supply, but probably excess supply. No one quite knows the answer to that question, but talking to the people whose capital investment is at stake and whose livelihoods are at stake, they maintain confidence that the prices will rise from where they are. In fact, they have to, because they are below the cost of production, and they maintain a positive view about where they put their investment.
Supplementary question, Grant Robertson.
Has the Minister of Finance seen this report about the economy under his watch, which features a boat that has run aground?
The Honourable Bill English.
Mr Speaker, yes, I have, and I thought how similar that is to the fate of the Labor Party.
Just complete the answer.
Well, Mr Speaker, in the interests of assisting the Vice Great Helmsman, as I understand it, it's the Westpac Economic Overview, and I note that their forecasts are between 2 and 2.5% growth over the next 3 years, despite the fact that they say there's going to be a recession.
Order. Supplementary question, James Shaw.
Thank you, Mr Speaker. Will he stop subsidising the expansion of high input cost dairying by spending $160 million on irrigation, when that money would be much better invested into capturing more of the dairy value chain to escape the boom and bust of commodity price cycles?
The Honourable Bill English.
Well, Mr Speaker, I couldn't verify that number. What I can tell the member is that the Irrigation Investment Fund has actually paid out around $8 or $9 million, much as some people would wish it was 160. 6.5 million, sorry. So look, the government spreads its support for infrastructure around the country, whether it's roads, public transport, and in the case of irrigation schemes, dealing with some of the short-term demand issues that enable those schemes to get up and running, and we don't have any plan to change that. I do expect, though, that the low dairy prices mean there'll be less willingness among farmers to finance the overwhelming share of that development that they pay for.
Supplementary question, James Shaw.
So is he aware that organic milk powder commands up to 6 times the price premium of conventional milk powder on international markets? And will he turn this crisis into an opportunity by helping move more dairy farmers into organic milk production?
The Honourable Bill English.
Well, Mr Speaker, if the member is correct that farmers can earn 6 times as much by selling their milk as organic milk, then I'm quite sure they will.
Supplementary question, James Shaw.
So when he says that this is not a crisis and that dairy is just 5% of the economy, is he saying that when the All Blacks lose it just doesn't matter because they're one of thousands of sport teams playing over the weekend, many of whom are winning?
Insofar as this ministerial responsibility, the Honourable Bill English.
Mr Speaker, clearly the Greens like New Zealand being able to watch the All Blacks lose, but don't want them to be able to watch them win in the World Cup, Mr Speaker. No, I mean, when people use the word crisis, well, the opposition should explain what that means. If they think it means dairy farmers are sitting around with their head in their hands, paralysed by low prices, then they're wrong. Actually, they're getting up every morning, out into the cold, wet weather, doing the calving, milking the cows, spending the money they need to get their production moving and get their product to world markets. Calling it a crisis seems to me to be particularly useless. In fact, it downgrades the resilience and the responsiveness of not just the dairy sector, but households right across New Zealand to a bit of economic pressure, which they can handle.
Question number 3, Andrew Little.
Thank you, Mr Speaker. My question is to the Prime Minister. Does he stand by his statement that New Zealand is on the